morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. And I have to say, this is one of my favorite video series going. And that's where Millennial Mike goes through all the comments and pulls out the spicy ones, the good ones, the ones that really I should go deeper on and frankly don't have time to. So, Mike, I still can't believe you've signed up for this large task each and every week. I appreciate you. The audience does. And what do you got this week?
Yeah, well, we got a bunch of good stuff to go through. So not only do we go through the comment section, but people also send us videos to react to. So we have a couple from Thatch, one from Milton Friedman, but those would be in a separate video. For this, what we're going to start with is questions. So the first one that I kind of saw the sentiment echoed a few times is the Fed's pivot. And it was kind of talking about one of Meet Kevin's latest videos where Meet Kevin has been heard claiming, right, the Fed is definitely going to cut 500 basis points in the next 6 to 9 months. Mike, we would love your thoughts on his expert analysis.
Yeah, wow. Meet Kevin and expert. Well, okay. So is it possible that the Fed cuts 500 basis points sometime in the next 9 months? I will admit it's possible. It's not probable. It's not likely. I mean, in the I mean, a world war, another pandemic. I mean, there could be things that would cause this, but I think what Meet Kevin and frankly most experts are missing is something called recency bias, right? If you've been in the game, certainly Meet Kevin's age, but even a decade older, even my age, right? Literally Generation X. If you've been in the game, as an adult playing with money and, understanding rates for 40 years or less, you've probably understood the Fed put, right? The Fed comes in, bails things out. What I think Meet Kevin and frankly most experts are missing is I believe the thing that Jerome Powell is trying to do is break the Fed put. And because he's going to do that, he is not going to cut rates 100 basis points, let alone 500 basis points. I do not see it. I actually watched that video, or I should say I listened to it. I was on a run. Is it possible? Sure, but it's not likely. If you were to give me a bet, and I'll bet Kevin or anyone, if they cut 100 basis points, I'll take the under. I don't think they cut next year at all. I think we go into next year after this 50 basis point bump in next week, December 14th. I think we get somewhere between 50 and 100 basis points in 2023 and no cuts. So I think Meet Kevin is wrong. I think he's suffering from recency bias. I think he's feeding his audience hopium, and right. I think hopium is dangerous.
Yeah, when I see a title like that, to me it just says, okay, if it bleeds, it leads. If it's negative news, it's the first thing you hear about. And the second most popular form of news is let's give people the news they're desperately praying for, and that'll get clicks and views. Okay, so Fed's probably not going to cut 500 basis points, but on that topic, a few of your viewers, a few people in your comment section, Inca Warrior 5470 says that the Fed definitely has to pivot early next year. The bond market is calling out their bluff. A Fed pivot is actually bearish for markets. Not sure why investors think it's bullish. And then he says that mortgage rates are already below 6% in his market. And he thinks that it's likely mortgage rates are in the low or mid 4s by next year. What are your thoughts?
So I love Inca is a viewer and an active commenter, so I appreciate him or her and I can't tell if it's a male or well, yeah, I don't want to assume, right? So I appreciate all their comments. They're very well done and thought provoking. So this question I did see or comment I did see, and there's really different parts to it. One is I think we have to be careful. What is a Fed pivot? I mean, I hear it talked about so often. Is a Fed pivot going from 75 to 50? Some people think so. Good news. I think that happens. And I think that happens in 2 weeks. Is a Fed pivot a pause? Some people think so. If good news, I think they pivot next year. I think they stop raising rates March or April, right? I still see no reason to change my opinion on a Fed funds terminal rate of 5. If that's what you're calling for, great. We agree. If you're calling for a Fed cut in Q1, I think that's wrong, as I kind of Meet Kevin. So I don't know what Inca calls a pivot. Is a pause a pivot? If so, I agree. So that's point one. Point two, he or she is correctly pointing out that the 2-year note, historically speaking, has kind of led the market. What does that mean? That means the Fed eventually gets the Fed funds rate to roughly what the 2-year note is. I believe the 2-year note as of Friday is like, let's call it 4.3. So what does that mean? Well, that means that after December 14th and my expected 50 basis point, we're going to be roughly at 4.25, which is close to that. Does that mean we have a no rate hikes next year? I think it's unlikely. I think we at least get one. I think we're going to go 75, 50, 25, which would still be within the realm. So I think, I do see the 2-year note as an indicator. I would caution that the 1-year note is at 4.6. So, that kind of means, but again, I think Inca, and it feels weird. That's the name. So I'll call it Inca is right to watch the 2-year note. I think that is, intelligent to do. Could they be wrong? Yeah, we've seen it over the last 9 months where the 2-year note has kind of gotten religion and taken a big jump. Could that happen again? I think so. I see no reason to change my 5% terminal rate. Right. I like to stay consistent and instead of jump around every week. So, but no, I think he or she is onto something. I think that was the second part.
Yeah, and you had mentioned in that comment thread, you had asked him to define, or him or her to define a pivot.
Oh, good.
And they did come back and they said that they defined it as the Fed lowering the Fed funds rate. So
well, then I disagree.
Yeah, by that definition, and we have our answer. So, all right.
Well, just so folks know, in my comments, I reply to the first. I never get engaged. I never go back. So Inca replied. I had no idea. I never go back. Sorry.
And that is exactly why we have this segment right here to get into things.
Exactly. Thank you for replying. So again, yeah, Fed cut in Q1. I'll bet $1 that doesn't happen.
All right. Well, we'll see if he takes your bet. Okay, so is the crash happening? In your video with Dion and the Lumberjack, your favorite three amigos, Jesse Verstrate, I think I'm saying that right, says that in that video, you guys talked about how on one hand, the message I'm hearing is we're excited for a recession because everything is on sale. But then he's also hearing that we don't think a single family home price drop will happen much, if at all. And he thought that sounded contradicting. So you're excited for a recession, everything's on sale, but you don't think single family home prices are going to drop, if at all. Can you please explain that a little bit more?
Yeah, that's basically because, investors, myself. So again, right, what have I done in the last 6 weeks? I've bought 2 deals for 30, roughly speaking, 30% under list price. There will not be enough of those to move the market, right? I'm a greedy son of a bitch writing disrespectful offers, but I myself and the thousands of people that do the same thing won't move the market. Most people pay list price. They just do. Look at the transactions. The average price to list is now 99.3% last time I saw on realtor.com. We just won't move the market. I will find the motivated sellers. In fact, I would tell you that's my job. Find motivated sellers. They're hiding, but you can be found. And it's my job to get only great deals. I unfortunately don't think most people do that. I think they see list price, they go, I can afford it, and they pay it. So I stand by it. I think there will be some outstanding deals. And oh, by the way, I've gotten 2. My second one closes Tuesday. Like Tuesday, what would that be? The 6th. And I'll take videos and share them the whole time, right? I'm sharing videos every day. Updates are done. Yeah, I'm really doing this thing. But yeah, I see, and it really makes me nervous, right? Lance Lambert, Fortune editor, who I talked to on Thursdays. He shared with me that John Burns, real estate consulting, somebody I know, respect, and admire, is calling for a 20 to 22% crash in median home price. Like we're talking the same metric by the end of 2024. That feels like I should pay attention, but I see no reason to change my opinion. And I think John Burns and most people don't understand our demand curve's not 6 million, it's 3.7. And that's why I stand by my plus or minus 1%. We saw 40% appreciation in 2 years. That's a decade's worth. So I see flat for 5 years at least.
Hmm. And the most important thing is people need to know their market. For instance,
Yes.
Seattle right now, where I live, is the number one depreciating market. Beth and I did a video on that recently. I'm helping a friend of mine buy a duplex, 500,000. We were able to get the purchase price down 13 grand. We were able to get
Yes.
$20,000 in closing costs, and every single repair we asked for agreed to. So if you know your market, yeah, maybe there is an opportunity for you to actually make a little bit of money, buy something that's on sale, get a deal. It's probably not going to affect the national median.
No, I want to reiterate that. That was something I really, even Lance brought up. Lance Lambert, Fortune editor. He's like, Michael, what you talk about your buy box, all this stuff nationally speaking, you and I geek out, meaning Lance and I geek out because we've been looking at it for 30 years. Who cares? Go look at your buy in your buy box, not even Seattle. It's blah, 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 zip code, blah, 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 type, blah, whatever those variables are. You become the expert in that micro segment and go only buy great deals, please. And if you do, let me know and I'll send you a card.
Well, when they close on their deal, we've already made it known that we're getting there first, because you started coming out with, instead of
golden cards,
the golden plated ones. Yeah. Okay, Mike, you're wrong about wages. Okay, Craig Goldstein says wage inflation is not gonna happen, and housing will decline in most of the country and last for years. Your thoughts?
I love, passion is great. I bring it, so I appreciate that. That's respectful comment. I finally had to block our friend Jay, who is often a negative person.
Angry Jay.
Angry Jay, yeah, he came out and was very disrespectful and foul mouthed, and I'm like, I had enough of this guy, so he's gone. He or she is blocked. I guess it's a guy, but no, I like comments like this. I'm wrong all the time, and I own it. I have a shirt that says "swing and a miss," for heaven's sakes. I have it right here.
I wore mine in a video yesterday. I think it's in my laundry.
I miss all the time, but I'm going to keep taking shots because my batting average is better than most. But yeah, I think he's wrong, and I would argue that Friday's job numbers tells you you're wrong. Just from yesterday or Friday, wages are up. I'm going to go from memory, 5.2%. Last month was 4.6, so they're accelerating. I think they were up 0.6 on an expectation of 0.3. And what I would tell this individual is, I think they're focused on wages in the job market of today. I believe what most people are missing in this case, because it's a very passionable subject, is I believe the U.S. economy in a decade will be fundamentally different today. I think we will manufacture more stuff. And that's inflationary. We pay our people more than we pay people in China. We just do. So I believe the U.S. economy is going through a structural change. It's why I believe inflation is three parts: stuff, easy; hard, housing; really, really hard, wages. So I fundamentally disagree. I think wages keeps us close to anchored at about 4% for the next 4 or 5 years. So I think they're wrong, but I'm wrong all the time. So maybe he or she is right.
And their second part of that question again was, housing is going to decline and last for years.
If you could tell me where we're going to get 2 or 3 million active listings more than we already have, I just don't see it. It's not set up for that. I can't even logically think of a way that it would fall. I mean, if interest rates went to 10%, sure. If unemployment went to 10%, sure. I don't know what else would do it. It would have to be something big. I just don't see it.
Okay, this is one for economist Mike to just do a little explaining for somebody here. So Chancey Calhoun asks, how can rates stay the same or go lower if the Fed is at the same time raising rates another point? I'm not an expert, but it seems logically, wouldn't we be in the sevens? Am I wrong?
Well, logically speaking, or simply speaking, I think I'm really happy to see when people put stuff together like this, because they are starting to play dominoes. Unfortunately, there's a variable that he or she doesn't appreciate, and I've tried to share it with folks. So this is basically what happens, right? The 30-year mortgage is not based on the Fed funds rate. So the Fed moves rates up, doesn't impact mortgages, at least directly. Simply speaking, there are two things. It's the 10-year note, and then there's a spread or a margin. Banks add margin on the 10-year note based on how risky or aggressive they want to be. So you can go back through history, and the average is 1.7 to 1.8. So if the 10-year note's 4, in an average market, 30-year mortgages will be about 5.75 to 5.9, right within that range. What we have seen over the last 9 months, because the Fed has been, we're going higher, is that margin, it got over 3%. It was, by one account, 2 standard deviations away from normal. So what I think happened last week, and why the 10-year note went down, why mortgage rates went down, is most people now believe 2 things about the Fed. We are not going to 7, and we are not going to 6 Fed funds rate. 2 weeks ago, we didn't know. So they added a huge margin. Like, I don't know how. James Bullard just said we're going to 7. I guess we're going to 7, right? So the margin was fat. What happened last week is, I believe 6 and 7 are off the table. So now the question is, do we go from 4.5 to, sub 6? Basically what that means is we're almost done. So banks are getting less nervous. So the spread is decreasing. So in theory, and it's happening right now, the Fed could raise rates like they will next week, and mortgage rates can come down because it's the margins being compressed. We will eventually get back to 1.7 to 1.8 spread. And frankly, we could go lower, right? We have this thing called regression to the mean. We got so stretched, it's possible it comes down to 1.5, 1.4 as banks try to generate more fees and more income. So they're logically onto something. So I want to give them kudos, but they're missing the spread.
Yeah, so I guess if I break that down for the layman's terms, myself, not an economist, not a college-educated man like Mike, you got the Fed funds rate and you got the bank rates. And typically there's a margin that's about here. But what happened when the Feds decided to jack rates up, the banks way overshot it. But now the Fed only coming up here, so the banks are slowly coming back down. But I assume at some point, if the Fed went too high, banks would then have to go up again. But that would be a lot of raises.
Well, yeah, no. So again, it's not necessarily the raise, it's expectations. Banks did not know how high the Fed had to go, so they added a spread. Right now, again, what I said last week is important. I think the banks know 6 and 7 aren't possible.
Right.
So now the margin's coming, because now they only need to play with, a point to a point and a half. So yeah, they're getting more confident.
Hopefully that answered your question, Chauncey. If even me, a police officer who got all C's in high school, could understand that, then hopefully it was good enough for you. All right. So you've gotten a few new viewers lately, but we're still getting some of the same old questions. So let's go through our favorite hits. Peter Navarroy, I think I said that right. He says, any advice for somebody trying to get their first rental property?
Get a buy box, look at it every day, learn average, only write or buy great deals. And what I would really tell you to do is I created a deep dive playlist on this channel. Go watch video number 1. It's called Buy Box. Go do that.
Or you could watch any of the 8,000 videos that Mike also created over the last several years. That's going to take you a little bit more time, Peter, but how dedicated are you? Following up with the same type of thing, the Joy series, they say, Mike, my wife and I read your book and we loved it. One thing that stood out was how it's important to understand the cycle of real estate and know when to buy. You talk about how you moved from single family homes to multifamily and then back into single families. With the current economic environment and real estate market trending downwards, we wonder if we should be buying now or should we hold?
Again, what I would tell anybody to do, like I've said many times, you can't time the market, but what you can do is you can pivot to only doing great deals. So I think it was 9 months ago where I threw good out the window, right? If you go back and watch, the first 6,000 of my 8,000 videos, I talk about learn average and then buy good or great, because we were in a hot market. Once the market started to plateau and I saw inventory crashing and buyer seller demand falling, I said, throw good out the window. And most people do. Most people won't do the work. They just won't. I give them, the breadcrumbs. I tell them how to do it, daily discipline, buy box, spreadsheet, yield, all of this. They won't do the work, but it takes work. I mean, I got a hat, a shirt, it's what I talk about, right? Do the work and uh, lead by example, right? I'm doing the work every day. Gotten 2 deals out of the MLS. I didn't get it. I look at my market every day. The last time I got a deal out of the MLS was 3 years ago. So that is 1,000 days between deals, but I still look. And I have the money. It's like I could have bought a gazillion deals, but I only buy great deals. So it took 3 years, and in the span of 6 weeks, I found two because the market's different. So do the work, but only do great deals. And if you don't find a great deal, show up tomorrow. Show up tomorrow. Show up tomorrow.
If you can't define what a average, great, and good deal are in your market, it just means that you haven't been doing the work long enough. At some point, you'll have looked at enough deals, filled out enough of the variables in the spreadsheet, and then looked at the yield or cash on cash return, and you'll be able to say, oh, in my market, 15% or greater is a great deal. 10 to 15% is a good deal, and anything under 10 is average or bad. Once you get to the point where you can look at it and it clicks, then you'll know what great is, and you'll be ready to start buying.
It's like it's. I mean, when you get it right, I mean, it stands out like neon lights.
Yes,
it's like that one.
Right. And then the only thing you're concerned about is that, oh, shoot, I better get it now because I don't want to miss out. Great deals can be rare.
Yeah, exactly.
Okay. We got a couple more questions, 2 more. So you're famous for saying that you believe this recession is going to be a white collar led recession. Robert says, I'm wondering if it is a white collar recession, will it drive home prices down from the top first and then lower priced houses later? So are we going to see a drop in prices with more expensive houses first?
Yeah, I think luxury is feeling it already. I've talked to many brokers. Luxury, Beth has told us that, Omar, Adrian. So yeah, I think luxury is hit first. I also think, just to kind of pile on, I think there's a couple of cities like San Francisco, Santa Clara, San Jose, Orange County, Seattle, that are very tech heavy, that will feel it first. And I think the data proves me right. I do not seeing it being a waterfall. I think Beth was the first to point this out, and I think it's correct. There's 3 segments to the market, right? If you put the median is the middle, anything 1.5x, I'll call luxury. That's already in pain. But if you go, 75% of median, there's just nothing there. There's no supply. So that market will be fine. So I don't see it affecting, 75% of whatever your median is. I just don't, there's nothing, you can't build them for that anymore. So I don't see it rippling down.
Interesting. All right. Okay. Last question of the day. We're going to end on a happy note. You are also famous for talking about how people need to not only audit their network, but audit some of the content that they consume. There's a lot of negativity out there. Negativity sells. So 000 says, since I've unfollowed the doomers at Zuber's urging and have gradually been adding the folks he hosts with, my YouTube feed now serves me great stuff like this, the video he was watching. If you're reading this comment and you haven't yet started to unfollow the fear mongers, do it now. It changes the game and it is way better for your mental health.
I sold artificial intelligence software, AI software, for a long time. And software is non-emotional. It will feed you what you click on. It's supposed to do that. So you, as an operator, the person with the mouse or the finger clicking, you're telling the software what you want to watch. So if you don't delete, block, unsubscribe, I don't know what to tell. I can't fix that. It's a 10-to-1 ratio, right? 1 fear video takes 10 positive videos. So 000, thank you for the recognition. Thank you for doing the work. Most people won't. Most people want to be fed garbage. Garbage in, garbage out. I can't help that. I'll tell you the real news, and sometimes it's not pretty, but with great pain comes great opportunity. I proved it several real estate cycles, several recessions. But hey, if you want to be that person who in 3 years goes, I wish I did, regrets a great teacher. So yeah, dude, cut stuff out. Come on, just stop watching that garbage.
There's an opportunity in every market at any time. There's always people investing successfully and unsuccessfully. So copy the people who are doing it right and don't get discouraged. Mike, that was all the questions that I had for you today. Again, we've got videos coming up from Thatch, from Milton Friedman that we're going to react to next. It'll just be in a separate video.
Awesome. Thank you so much. Where can people find you?
Yeah, if you want to hear about long distance real estate investing or investing in Gary, Indiana, just look me up, Millennial Mike, on YouTube or on Instagram.
Thank you so much.